Hey, this is Chris. Now I'm going to be talking about our predictions for 2021 and what's going to happen in markets. Now this time of year is very popular for economists and financial analysts to start to make predictions about what's going to happen next year. And if 2020 has taught us anything at all, I think it's that the world is unpredictable. Knowing exactly what's going to happen next year is impossible, just as it was impossible to predict at the start of 2020 that we were about to see a market falling 35% plus before the biggest recovery in share market history. So predictions are difficult. It's always been my approach that rather than try and predict what's going to happen in markets, make sure you've always got an investment portfolio that's prepared for different potential scenarios. Because every year, it's not a single scenario that's possible, but in fact, thousands and thousands of different scenarios that could play out, and you need a portfolio that's robust enough to be able to handle them. Now, I think it's particularly important at the moment, given the range of scenarios that could play out in 2021, which I think will be in fact affected by a couple of main things. One is when and how and in which countries things return back to normal next year after the big COVID recession that a lot of countries have had in 2020. And the second big driver, I think, will be the impact of the huge stimulus that a lot of governments and central banks around the world have handed out on things like growth, on employment, and importantly, also on inflation. So I'm going to be talking about 4 different scenarios that I think could viably play out next year and which asset I think would benefit the most from that. Now, one scenario I think is possible, although I think people are very optimistic at the moment and don't think it's very possible, is that there are rolling lockdowns around the world. The cure for COVID is delayed or doesn't come about as expected. Businesses rehire less than expected, and people, consumers, cut back on spending. Now, this would lead to quite a deflationary environment around the world, and one that would probably be supportive of assets like government bonds. So while government bonds are already trading at yields of close to zero, it's possible that we could enter a world of negative interest rates around the world next year, and bonds could be a good performing asset. Another scenario would be that interest rates around the world stay low, but stimulus that's been provided through this year actually leads to inflation around the world. And so that leads to an environment of what's known as negative real interest rates, where interest rates minus inflation becomes negative. Now that's an environment, historically at least, that gold as an asset has performed very well in. So we could certainly see another year that gold does strongly. Another possible scenario, I would call this scenario 3, is that we do see around the world a gradual return to normal. It could be because they find a cure for COVID and it's made widely available around the world. And the global economy is supported by low rates that remain in place around the world, and we start to see a tick up in inflation. Now this would be a reflationary environment, and one where shares in countries like Australia, as well as emerging markets, would probably perform quite well. And finally, scenario number 4 would be a scenario where inflation and long-term interest rates remain pretty low, but some of the working from home trends that we saw emerge this year strengthen, and that may be an environment where global developed shares, particularly let's say tech shares in the US, continue to do strongly. So as you can see, there's all sorts of different ways that 2021 can play out, just as there was the same for this year. I do think, again, making predictions about exactly how it's going to play out is a pretty pointless exercise, and it's much more sensible as an investor to be humbled by the fact that you don't really know what's going to happen next year, and you need to have a portfolio that can withstand different potential worlds. So have a portfolio that can perform well in a period of increasing growth or poor global growth, that can perform well in a period of increasing inflation or deflation, and can perform well if interest rates start to rise, or at least expectations start to rise, or interest rates continue to fall and go negative. And I think that would be my advice for 2021. If you have any comments, please leave them below. I'd love to know what your investment strategies are for next year. And if you like videos like this, please hit the subscribe button.